Hello, hello, hello. Okay. Welcome to yet another session this morning. We're trading the London session, hopefully together. Let me just share the link in some of the various places. Just 1 minute, let me share the link. And hopefully we'll find some good trades today. The London session. Okay. Feel free to share the link, guys. Feel free to share the link. Let's do this together. Okay. Now, what I intend to do today is basically, go through some of the trade ideas, we've been looking at, for the last week or so, and obviously, some of the new trade ideas and, that I am going to be finding today, hopefully. There are some trades we are in already, so I do want it to be that you stay tuned if you want another opportunity to get into those trades. I mean, that is basically one of the things I shared in my Telegram group yesterday, saying that I'm going to be, showing you how I seek to take advantage of the market when it presents me with a second opportunity. A second opportunity basically meaning if there was a setup I missed, a trade I missed, how do I get back into it? So I'm going to be doing that, this morning. Let's just, get back on the chat and see what we can find. Feel free, obviously, well, not feel free, do click on the like button for me. Let YouTube tell others that we are here live. Okay. Okay, so that's a trade, we looked at last week. For some reason, it basically decided to just keep pushing ahead. Now, we had marked up this this chart, drawn the harmonic pattern and all that. As you can see here, it was a bearish basically, which means, we were anticipating that the price was going to be dropping. And, oh, okay, sorry, this is not the one I was referring to. I'll get back to that one. But as you can see here, this was where we anticipated the price was going to drop. And yes, it did drop. It dropped indeed. And you can see what it's been doing ever since. It's been doing a zigzag, as it were, zagging up and zigging down. But as we see here now, it still is pushing in our direction. At some point, it basically went past our stop loss level. You can see here, you can see this position box, the green bit of it is, where we anticipate the price, going. And obviously that is the area where we intend to come out of the trade if it went against us. See, having given us some pips, it did give us some good pips. If we measure from here to there, it gave as much as 160 pips or so, before it went back up. But that's exactly what the market does. Eventually, it went up against us, and it's come back into where we want it now. I mean, think of the broken dotted lines there, or the dotted lines, if you like. That's the demarcation between where we want to be, which is this green bit of the box, and the maroon bit is where we do not want to be. But we see here, having broken, to the upside, is come back in. What you must understand is that as traders, it's good to understand structure, market structure, to understand market structure. And one of the best places in which to trade is around structure. Why? Because they tend to be key levels, isn't it? They tend to be key levels. So you want to be trading around structure as much as possible. They are areas of value, areas where you want to enter the market, area where the price is most likely going to move in one way or another in a powerful way. And that's what happens. You will see that, when it comes, when price gets to area of structure, it could break it like it did here. I mean, if we consider that this is structure, this is a harmonic pattern. This is X, A, B, C, D. And you'll find that each of those areas, labeled alphabetically are, structure, market structure. And you'll see that even when price got here, it pushed down. It got here again, pushed down as well. But on this occasion, it broke past it because that's what the market does. But you can see before it actually broke to the upside here, there was a bit of oscillation going on there before it eventually broke up. But then it's come back down. And you can see what's happening now. You can see where the price is now. It is again at structure. It is at structure. Price would test the certain levels over and over and over again. That, of course, is one of the ways in which an area of the structure in the market is confirmed. Like you see here, it came here to structure. It got here and was doing its own thing, before eventually moving up. But that again is structure. You see, it basically would come to, test structure, either breakthrough, but on this occasion, bounce off it. And it is a structure again. When price is a structure, you want to watch where it wants to go. You want to watch for where it wants to go so that you go with it, as it were, in that direction. So let's just have a look at other currency pairs. For those who are following me, who are watching, perhaps seeing me for the first time, you might also want to join our free Telegram group, whereby you can actually, follow me and the details of the trade after we have left YouTube. So that's what I would advise you do, because I would usually, post, when I am getting into a trade, when I'm coming out, when it is the case, I'm looking to wait to see some particular, price action signals on setups before getting into the trade. The Telegram group is where I do that. So let's just have a look at other pairs which I've been watching. I do intend to get into this trade, at some point today. Who knows? Maybe before the end of the live stream. But in the meantime, let's just check other pairs. Okay, let's check other pairs I've been following. There was one. This is pound card. Pound JPY, which is a popular one, obviously is another one. I'll come back to that. Let me just, bring them all up. There is the Euro Japanese yen. There is this one which we entered last week. You can see it's pushing in our direction. So I will stay on that one there as well. Let's look for another one we are in or have been looking at. There's nothing for pound USD. I mean, some of you might wonder, do I trade just pound? Oh no, not just pound pairs. How about this one, Euro New Zealand dollar? We see that this trade, which we first entered perhaps about 3 weeks ago, yes, 3 weeks, when you are swing trading, sometimes you might need to be in a trade for as long as a week, yes, a whole week, 2 weeks, and even 3 weeks. This obviously took, I believe it took about 3 weeks to play out. But what matters is that it went and hit our final take profit. You can see it went and hit our final take profit. Okay, so let me just come back to this. Let me come back to this. Let's come back to this. So good morning, guys. Give us a like on YouTube there. Give us a like. Let me know where you are trading from. Let me also post the link for our Telegram group, so you could actually join us. By now, I'm sure we all know what Telegram is. If you don't know, I'll tell you. Now, Telegram is similar to WhatsApp, if you like, except that a lot of traders prefer to, or trading communities, as it were, prefer to use Telegram. So I've just posted a link there for our Telegram group. Simply click on it, download it on your phone if you want, download it on your PC or laptop, and basically, join us on there. Okay, so we're going to find some trades now. I mean, I've showed you some trades that we are in or we have been following. Okay, so we can see here, we can see here having hit the final take profit, it's come back into this area. So we are not going to be looking for how we would perhaps want to trade this. We do seem to now have, a bearish, some bearish momentum on this one. Let's see what's going on here. Okay. Whoops. I mean, when looking to get into trades, obviously, as much as possible, if that is your style, you want to be making use of trend lines. You want to be making use of trend lines. Okay, so I mean, obviously, that will give you an idea of what's most likely going to happen next. This is the 4-hour time frame. So for me, what I've been looking, for now is to see how price, responds to this line. I mean, obviously, we see here we've connected this part of the, we've connected this swing low, and this obviously to, we've linked it using the trend line, and we're basically going to see what happens with the price here. Let's go to a lower time frame. Okay, that's the 1 hour. And we can see where price is. We can see where price is now. It lines up with this level. Well, it is at this level. Let's try the 15-minute. We are basically looking for how we want to get into this trade. Like I say, we don't have to get into it, during this session. That could mean we are forcing trades. We don't want to force any trade. Okay, so we see that's what's going on there. That has been a big push to the downside. A strong bearish move we see here in the last 1 hour or so. I wonder if there was any news. I haven't checked the news today myself. You know what? Let's check the news now and see what's there. I think, well, I did check it yesterday anyhow. I know there wasn't, if I can remember, there wasn't anything that okay, so I know there wasn't any news event that could impact the market strongly today. I mean, we can see here, they are all yellow folder events. The German final GDP and all that. Okay, that's fine. So whatever, it could be purely technical reasons. It doesn't have to be fundamental reason why the price has moved like that. So I will basically wait to see what happens with this. I won't be quick to jump into the market here. I will not be quick to jump into the market. I want to see if there's a trade we can get into today, guys. Okay, let's move over to CHF-JPY. I am still in this trade. As a matter of fact, this was a trade that gave us a second opportunity. That is basically one of the things I said I was going to be talking about today, how to take advantage of the market when it gives you a second opportunity. Now, especially with harmonic patterns and with, I would say, a number of good strategies out there. If there's a particular price point or level you're looking at, you would find that when price gets to that area and it moves the way you thought or anticipated it would move, even though you missed the trade, price would usually come back to retest that area. And that's what happened here. That's what happened here. Let's move this out of the way. We see here, this being a bullish butterfly pattern, which basically means we're, looking at the price going up. Price, came from all the way there, got to this point, the price reversal zone, PRZ, and it began to push up. Guess what? It came back down to that area, went up again, came back down. So if you missed the opportunity the first time, just mark the area. I mean, I suppose I'm referring now, first and foremost to those perhaps who are new to trading. If you missed the price entry, the initial entry, just mark the area, especially if you are following somebody, who is more experienced as a trader. Just, note that that area is significant. It's an area of value from which price would tend to move. I mean, after all, this is a harmonic pattern, which is one of the best reversal patterns that I know. So if price was coming from up there and got to this price point, it was going to begin to push up. It came back the second time. Know that it might keep coming back here, maybe 2 or 3 times before it eventually moves. Now, I mean, it's come here now, 3 times. I'm talking about recently. I mean, if we were to go back, we will see that price, always, reacted around there. Price always found it difficult to break below that area. Even when it did break below it, it did not go too far before pushing up. Here as well, it broke below that area and pushed back up. Yes, at some point, the price is going to go down, but now it's finding this area of support, as support. So what to do, especially if you are part of those who, if you're part of my trading community, is to note that when I post a harmonic pattern on Telegram, price could test that area a number of times. Now think of the fact that, from here, the price pushed this high. It pushed this high, which is about 67 pips or so, and it came back down. The price could basically take off in one direction. You are thinking, oh, I missed the trade, and you jump in at the wrong time. Guess what? If you had jumped in here just because you saw a bullish candle or because you saw some bullishness, price would have come right back down and you will be in a drawdown of over 60 pips. Well, drawdowns are part of the market, part of trading. But as much as possible, I'm sure we would not want to be in drawdowns, because this being the 4-hour time frame basically means that this drawdown, if you were in this drawdown, you could have been in there for maybe 2-3 days. Nobody likes that. A lot of people just get tired and close the trade and take the loss. But anyway, what do we look out for here? What do we look out for when we get to key levels? We want to be looking for either bearish or bullish or bearish signals, that will give us an idea of what to do. Because we know we're looking to buy here, this was a good opportunity to get into the market. Well, this initially, because of this bullish engulfing candle, it came back there, another bullish engulfing candle, and we saw it push up. Here, I suppose, you could say there was a piercing candle here, or a piercing candle setup, or a railroad track, not a complete railroad track, but that's good enough for us. I mean, with regards to a railroad track, you could enter at the close of the second candle or the close of the candle, immediately after the second candle of the railroad track. Anyway, not to spend time on this, like I say, I am already in this trade. I won't be looking to get into the trade again just yet until I find another opportunity. So what I would do, what I've been looking for, guys, is for price to retrace slightly. Some I want to jump into the trade now. Let me see, but let me just pull out this. Oops. Okay. Now we see, that this is some sort of, market structure. You might not want to call it structure. You might want to call it a swing high. Let's make it a solid line. So you might want the price to come back here before you buy. Or guess what? Even if you decide to buy now, where would you place your stop loss? I mean, surely you're not going to be placing your stop loss. I mean, this is the position box. I mean, surely you would not be placing your stop loss here. That would be such a huge, the risk to reward will not be very favorable. From where the price is now to where we had initially had as our stop loss, it means you'll be having a stop loss, a very wide stop loss of 160. You don't want to do that. So what you want to do, because the bullish momentum has set in, if you were to enter the trade here now, I would say you'll be looking to come out at somewhere here. As a matter of fact, I would close this up just so that you know for sure that we are not exactly using this as a stop loss anymore. Anybody who does that, that'll be a very wide stop loss. But even where we've placed the stop loss now, it is still a very wide stop. If you were to enter the trade now and use this area as your stop loss, that would be about 90 something pips. Right, okay, let's see, because this is where we have as our final stop loss. If you were to do that, if you were to enter now, you have a stop loss of about 90 and a take profit of about 95, 97, maybe 100. That is almost one, that is basically one-to-one. So I would not be trading this as a one-to-one, taking this as a one-to-one trade. I mean, some of my strategies are one-to-one when you're scalping or day trading, sometimes yes, but not this one, not this swing. So where I would like to place my stop loss is somewhere here, somewhere here. And if it does go all the way, that would be a good risk to reward. Let's just measure it. So if you were to enter here, place your stop loss here, that'll be 42 pips, and you'll be going for 98, which basically is 1 to 2. I mean, that is good. So if you were to place your entry here, as a matter of fact, I'm going to be entering this trade again. I'm going to enter this trade again now. I'm going to enter this trade again now. So like I say, you'll be going for a 42 pip stop loss. So this is CHF-JPY. This is CHF-JPY. I'm going to enter this trade again now. Let me get in this trade, guys. If you are watching with us today, if you are trading with me, kindly hit the like button there. Let me know where you are trading from and hit the like button for me. Yes, yes, yes. Good morning, BETV channels. You want to join the Zoom? Okay. Okay, I mean, what I'll do, I mean, if you're part of the Telegram group BTV, I'm not quite sure, your name. I know this is part of your YouTube channel. Send me a message on Telegram. Send me a message on Telegram so that I know exactly who you are. The Zoom is actually for the VIP members and the lifetime members. Send me a message on Telegram or some other platform, and I'll know who you are. But in the meantime, I am getting into this trade. And it's set to push up even more. It's set to push up even more. Okay. I'm just cutting into the CHF-JPY for a buy. Okay. Now I'm going to be taking this trade on a couple of accounts. I always advise guys that you have, at least two accounts with two different brokers, two separate brokers, not necessarily the same broker, just in case, like they say, don't put all your eggs in one basket. Don't put all your eggs in one basket. Anything could go wrong. It doesn't have to be something, fishy or dodgy. It could be the case you want to move some funds in one account, and in the meantime, you want to trade another account. Or the way I do it sometimes, when I get into a position in one account, I would wait for a pullback to get a better entry on a different account. Hey, that's something that I do often, and it works out beautifully a lot of the times. So, okay, let's go back to that trade. We've just entered that trade now. Let's go back to that trade. Okay, I mean, I am seeing some names, on YouTube. Welcome, Overcomer. Welcome again, BTV channels. Do join the Telegram group and let's link up and be part of the great Forex trading community. Okay, so I have now entered this trade. What I'm going to do is I would place a dollar sign, not a pound sign here where I entered, so that we can all follow this together on our Telegram channel. This is where I entered. If you notice what I did yesterday, with one of our trades, I don't think it was this one. Let me see which one it was. I don't think it was this one either. Let's check this one. Let's check. Okay, so it was fine, beautiful. So this is another trade we are in, guys. I placed the pound sign. Why am I saying dollar? I placed the pound sign at the entry. This is basically where I got in. You can see, well, I did not get into this trade. I'm waiting for a pullback. I missed this entry. And at the moment, it has pushed about, 120 something pips from entry. It lingered here a number of times. Again, we see, it got here, pushed up, came back down. It gave us at least one opportunity to get in the trade. But we are going to be getting another opportunity on this trade. We basically would just have to perhaps, wait for a bigger pullback. We could go to a lower time frame and see what we could find. If it pulls back to here, this swing high, it'll be a good time to get in, guys. Let's just move this up a bit. So if it pulls back for us by about 25 pips, we should be able to get back into that trade. So what I'll do is I'll place that there. Now, guys, do not chase trades. And by that, I mean, if the trade has left, the reversal zone, like here, don't necessarily be jumping in when it has moved away by about 100 pips, even 50 pips. Wait for it to pull back. It might not pull in with this one. It might not pull back to the very where we had wanted to enter initially, but at least if it pulls back a bit for us, then you can get in. You want to have a good risk to reward. You want to have a good risk to reward, as it were. So I'll be patient to get a little pullback. The market always pulls back. It might not pull back sometimes as much as we want, but it always tends to pull back. Let's try the 15 minutes and see. Yeah, I mean, similar to the 1 hour, that is where we wanted to pull back to. We wanted to pull back to here, before we jump in the trade. Oops, that's not what I wanted. That is not what I wanted. I'm looking to get some precision entry, guys. Looking to get some precision entry here. Now I know, there are some experienced people watching this today or will be watching this. So also those who are new to trading. Now, what I do tend to do often, guys, is even as we have here on the 15-minute, after this big push, I will draw up a box and wait for price to either break above the box or break below it. So what tends to happen whenever the price pushes in one direction powerfully is that it goes into a period of consolidation. And that is basically what's happening here now. So let's, you can see there was a little, there's a little consolidation there after this big push. After this big push from here, well, maybe not a big push, but after the push, there was some consolidation and it broke out, and it's come into another consolidation. So that's basically what's happening. If the price breaks above, then you might want to jump in at that point. If it breaks out of this box to the downside, you want to be mindful. You would then obviously, note this area. Preferably, I would want it to come back to this, level, before, buying. But like I know, and I'm sure, like it might not come to this level. So we'll basically just see what happens, with this, range box, range box we put up there. Once it breaks above, you could then decide to buy. This is New Zealand dollar USD, guys. I'm sure you can see that. So what we're going to do is to consider where we would have as our stop loss. Where would you place your stop loss? Where would you place your stop loss? Now, if you were to get in here, I would say you could use, it doesn't have to be a very tight stop loss. You could have that as your stop loss, or here below this candle. A good guide, if you are looking to find a stop loss, is to basically consider the previous candle. In this case, because we are looking to buy, you consider the low of the previous candle or two previous candles if you do not want to use a swing low. Obviously, if you were to have it, your stop loss here as a swing low, then the risk to reward might not be that good. If price was to come all the way back here now, guess what? It might be because it's reversing. It's going to go down. So obviously, you do not want to be using this, one, because if it comes here, it might be reversing. And two, that would be a very wide stop loss, not a very good risk to reward. So I would rather place, the entry here. If I get in here or even here, I could use this as the stop loss or this candle. So consider where it is now. If we're to use here as a stop loss, that would be 50-something pips, 60 pips. You don't want to really go much lower than this. You don't want to really go lower than this. If you were to use this wick, this hammer-like candle, this candle that looks like a hammer, if you were to use below there, that would be 80-something pips, 90 pips. That's a bit much. And you'll be targeting 152. That is almost, 1 to 2, but I wouldn't want to use, a stop loss that wide. So if anything, I'll place my stop loss here. if I was to get in now, you know, that'll be like a 60 pip stop loss, you know. So that's basically what I would do. So let's move this. We'll make it red to indicate that it is a possible stop loss. You know, so we'll make that, you know, horizontal line red. You know, this is where we're looking to enter, somewhere around here. You know, if you enter now, well, this will be the stop loss. If you wait for a pullback, this will still be the stop loss. So note, guys, note what I'm doing here, you know, especially if you follow me on Telegram. That is where I do most of my communication, you know, and interaction with those who are part of our free trading community. You know, when you see $2 or pound signs, that's the initial entry. For me, at least, for me, not for anyone else necessarily. You know, you will see this 2 or maybe 3, that will be the initial entry. You know, if you see the next currency sign, pound or dollar, yeah, I'll say pound or dollar because I have been making mention of dollar, even though I meant to say pound. So I'll use those words interchangeably. So if you see 1, then obviously that's a second entry, me taking a second position there. So that's what I'm looking to take a second position on this trade, New Zealand dollar USD. So I will be doing, you know, further analysis after this Zoom. You know, we're coming close to the end of the Zoom session now. So, but at least you see that these are trades, you know, that we've entered. I mean, I have not entered this one yet. I basically saw it yesterday, you know, it had moved. I said, okay, fine, I'll wait for a pullback. So I'm looking to get into this trade myself. And of course, you know, there is this one, the CHF JPY. Now, what I'm going to do, guys, I'm going to take a screenshot of it, you know, and post it in the Telegram group so that obviously you can follow exactly what we were talking about. I mean, for those who are, you know, with us today on YouTube, if you're not part of our YouTube community, if you're not part of our Telegram community, guys, you want to join one of the best Telegram community out there. And I said that. I'm sure some other people will say that. Now, we do give about, you know, 2 to 3 signals a week, you know, not necessarily every day, but across, you know, across the week or during the course of the week, we give about 2 or 3 signals because, you know, most of the signals that I post these days are for swing trades that are going to be in for some time. If they were day trades or scalping, you know, trades, and obviously, you know, you would not be able to join us in taking those trades. Anyway, so, oh, sorry guys, I seem to have been paused. I seem to have paused the broadcast there. Let me see. Okay, so these are the trades I was referring to. Let me just go back just in case you missed that. So when you have this, you know, double pound signs, it could be triple sometimes, is the initial entry, and this, you know, is the second entry. You know, so also we see here, this is New Zealand dollar USD. So also we see here, the initial entry was here. That was the initial entry. Let's push this out of the way. That was the initial entry. And this is where I just entered the trade again. I just entered the trade again there, you know, some minutes ago. And I'm expecting the price to now push up. I'm expecting the price to now push up for us. Okay, guys, you know, like I always say, do not be scared of drawdowns. Do not be scared of drawdowns, because when you're in a drawdown, it could be an opportunity to get a better entry, guys. That's the way it is. Now, you know, if you had entered here, although I would not advise that you necessarily just jump into the trade, because you think it's a bullish move, obviously if you had entered the market here, you would have been a big drawdown, a drawdown of about 50 pips or so before it pushed back up. Do not be afraid of drawdowns. The reason I love harmonic patterns is that they work a lot of the time if you enter at the right time. Now, this one might not push all the way, even though we are expecting this to be the final take profit. It might not necessarily go all the way, but sometimes it would. Well, not sometimes, a lot of the times. Let me show you an example just before we close. Let me show you an example of one that failed. Yes, we do have failed harmonic patterns. This was from last week. I remember I did say, okay, sorry, it wasn't this one. Oh, it was USD CAD. I'll come to that. I almost forgot the USD CAD. Okay, so this was one that played out. This was a super trade, just the way you would want it, guys. This is the way you would want your trades to go, even though it doesn't go like that all the time. This was the reversal zone. Guess what? It hardly went into that red area. It hardly went. It just more or less came, boom, coming down to hit take profit, the final take profit. Okay, so this one, okay, so this is what I was talking about. There are times when the price would not necessarily go all the way to hit our final take profit. It's for you to know and be ready. But at least if you had entered this trade, even if you didn't get in, let's do this. That was the price reversal zone. Let's mark that as green, broken lines. So even if you didn't get the price here, if you miss this first move, it gave you a second opportunity again, guys. So if you got in at the close of this candle, or even if you got in here, you would have gotten at least, I don't know, 30 pips. That's usually TP1 for me. 30 pips, TP1, with a lot of the trades. So it basically went in a direction, in our direction, before eventually coming down and hitting stop loss if you did not come out. I mean, if the price has moved 30 pips, I would usually recommend you take partial profits and move your stop to break even. So ideally you should not have lost this trade. You should not have lost this trade. And you can see here, I also, drew a trend line. I also drew a trend line. So after the price took off in our direction and it reversed, you ought to anticipate, or maybe not anticipate, maybe that's not the word. You ought to be ready to see what happens if it breaks the trend line. And if it breaks the trend line, you want to begin to think of getting out of that trade. So on the break or the first attempt of touching this trend line, pushed back up, came back down, what I would have done is to mark that area, that price, to mark that price where it broke the trend line, and to mark is a previous swing low. If it broke the previous swing low, then definitely I want to be out of the trade. Even if I was to give it some room, that's a previous swing low. You could even say, okay, fine, I might even decide to use this swing low, but that'll be going too far. I would place it under this previous swing low. If price broke this trend line to the downside and came and broke the swing low, that's price closing below it. When I say breaking the swing low or breaking the trend line, I mean not just breaking and then going back up, but instead I mean breaking it and closing below it. In this case, if it was the other way, it would be closing above it. Like here, for instance, we see, let's just make this bigger. we see here this candle broke the trend line, but did not close below it. It broke it, but went back above it and closed. But the next one obviously broke and closed below it. So at this point, I'll be looking to come out of the trade. Anyway, guys, so just one more pair, which I'm also looking at. I got some pips yesterday. I posted that in the Telegram channel, I believe. And that is our card, USD card. Oh, sorry guys, I didn't post this yesterday. I posted this, last week. But obviously we can see it's playing out now. So this again is how to take advantage when the market gives you a second opportunity. So this bearish band pattern was first drawn out last week. I know I was on holidays then. I posted it just before I traveled. So you see here, this was where we were looking to sell. But guess what? The USD, the Canadian dollar was so weak last week that basically the price just pushed way above our stop loss or our proposed stop loss. Because when I posted this on Telegram, I did leave this note there as well, saying not to get in until you see price breaking below the dotted line. By the time I posted this, the price had already gone above D, which is the price reversal zone. Again, this is X, A, B, C, D. Price had pushed above D. It had not hit stop loss or the proposed stop loss, but I knew it was most likely going to come back at some point, come back down. So I left this speech bubble here saying, only start thinking of entering the market for a sell when price comes back below the dotted line. The dotted line, guys, is usually my entry. That's where the entry is. Look at what I said. I said, wait for price to break below the dotted line and at least a bearish candle setup like a bearish candle setup like a bearish engulfing candle before you sell. So the whole idea was wait for either the price to break below this area, the dotted line, or wait to see a bearish pattern, like a bearish engulfing candle, or perhaps a pin bar. You might want to call it a gravestone or something, before you enter. So that is basically what has happened now. The price has broken below. I hope you guys were watching this. When I post these charts on Telegram, the onus is now on you to watch closely and follow. I don't necessarily, have to come back to say when I'm getting in. The chart is marked up for you. Know that you are going to get, you're supposed to get in around the broken dotted line or around the D, which is the price reversal zone, PRZ, and get in when you can. If you're not sure, you could send me a message or a question and ask what I am going to be doing, and we will basically, see what happens from there. Okay, guys, so I see that some of you have clicked on the like button. If you've clicked on it once, don't click on it again, because if you do, it's going to take away your initial click. So what you want to do, guys, if you have not clicked on the like button for us, I want you to definitely do that even now. I'm waiting. Click on the like button, guys. Click on the like button for me. Click on the like button. So you see what's happening with this one, the pound JPY, which is one of my beloved pairs. It's pulling back here now, which basically, ooh, in the last 4 hours, it's pulled back quite heavily. So, but this is good. Why? Because it is a structure. Again, guys, we talked about structure a lot today. you want to understand and know how to trade around structure, guys. If you're going to be successful as a trader, that might be one of the things you need to learn or you need to know. See, again, it is a structure. You know, there was structure there, but obviously we're not far away from, you know, where we are now. It doesn't have to be bang on structure. It could be just some pips away from structure, you know. So if price breaks below here, it might be going down a bit more. Otherwise, when we begin to see another, you know, bullish setup, then obviously that's a time to get in. But I believe this is going to, you know, I believe it's going to go this far. I believe we're going to be hitting our final TP here at C. You know, so obviously, just watch carefully, guys. Anyway, if you do join our Telegram group, you know, do say hello to me. Let's connect on there. So that's it for today, guys. I do hope you have indeed gained a thing or two. You know, if there are any, I've not done a YouTube video for quite a while. You know, I suppose because I've been doing live, you know, I've been streaming live on YouTube. I haven't exactly done any YouTube. If there are any topics or things you want me to cover, you know, with regards to trading, you know, do send me a message and hey, who knows, I just might cover your topic. So until next week, guys, you know, be careful with your trading, you know, but let's continue on Telegram. Let's continue the conversation on Telegram and see you again next week, Tuesday. You know, so what I intend to do now, I currently meet, you know, I currently have live streaming sessions every Tuesday. I intend to begin to have more sessions in the week. I intend to have more, I plan on having more sessions in the week, you know, and that would be a good one. You know, so guys, you know, let's just 1 minute. So guys, catch you next time. Bye now.